Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Compass Pathways Plc annual report. Compass Pathways Plc offers a range of businesses and services focused on mental health. At the core of their operations is the development of COMP360, a psilocybin therapy that has shown promise in treating various mental health conditions. The company's flagship product, COMP360, is currently undergoing clinical trials for treatment-resistant depression, post-traumatic stress disorder, PTSD, and anorexia nervosa. This innovative therapy has the potential to provide relief to individuals struggling with these debilitating conditions. By concentrating on psilocybin-based treatments, Compass Pathways Plc is pioneering a new approach to mental health care. Their commitment to research and development is evident in their ongoing clinical trials, which aim to establish the efficacy of COMP360 in treating complex mental health disorders. Compass Pathways Plc market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $2 billion. Compass Pathways Plc trades at a lower price-to-book ratio of -10.22 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 28% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company are multifaceted. Regulatory approvals play a crucial role in determining whether a product will be commercially viable, while clinical trial outcomes have a significant impact on the success of new products. Market conditions also come into play, as changes in demand and competition can affect revenue. In addition to these external factors, internal decisions such as share-based compensation expense can also influence revenue growth or decline. The company's income taxes are another important consideration, as they can either benefit or burden the bottom line. Furthermore, the valuation of share options is a critical aspect of financial reporting, with assumptions about expected option life, volatility, and risk-free interest rate having a significant impact on the company's financial statements. Ultimately, understanding these drivers is essential for investors and stakeholders to make informed decisions about the company's future prospects. By analyzing these factors, they can gain valuable insights into the company's financial performance and identify potential areas of growth or decline. The company's financial performance suggests that it is generating positive operating cash flow. According to the provided summaries, there are two seemingly conflicting pieces of information. On one hand, the net cash used in operating activities decreased from -$119,186,000 in 2024 to -$157,240,000 in 2025, indicating a negative trend. However, the most direct and clear information regarding operating cash flow states that it is $755. This figure suggests that the company is indeed generating positive operating cash flow, contradicting the initial impression created by the decrease in net cash used in operating activities. The company's financial health has remained relatively stable over the past 2 years, with no significant changes observed in its debt level and interest expenses. According to the extracted summaries, there were no notable changes mentioned on page 174 regarding the debt level for both 2024 and 2025. Additionally, a loan of $30 million was borrowed under a debt facility as of December 31, 2025, but this does not indicate any substantial increase in debt. Furthermore, an examination of interest expenses reveals that there has been a slight decrease of $38,000 from 2024 to 2025. This reduction is consistent with the information provided on page 181, which states that interest expense decreased by $38,000. Overall, these findings suggest that the company's debt level and interest expenses have remained relatively stable over the past 2 years, indicating a manageable financial situation. Management is expressing caution regarding the company's outlook due to various external factors. The company's development of its investigational COMP360 psilocybin treatment may be impacted by regulatory requirements, delays, and evolving policies. This could lead to increased costs and uncertainty in approval timelines. The company anticipates significant expenses as it prepares for potential commercial operations, particularly in sales and marketing activities. Management expects costs to increase substantially due to ongoing activities, including advancing Phase 3 program for COMP360 in TRD. The company plans to accelerate NDA submission and prepare for commercial launch of COMP360 psilocybin treatment in TRD. Management is also uncertain about the successful development and commercialization of their investigational COMP360 psilocybin treatment due to numerous risks and uncertainties. They expect expenses to increase in the near term to prepare for commercialization and anticipate delays and evolving regulatory requirements that could impact approval timelines. The company's outlook is negatively impacted by government orders, regulations, policies, or guidance, which may affect its ability to raise additional funds. A prolonged government shutdown could have a material adverse effect on the business. Macroeconomic conditions and geopolitical events may also impact the company's financial condition. Management is saying that they expect costs to increase in the near term to prepare for commercialization of COMP360 psilocybin treatment and anticipate delays and evolving regulatory requirements that could impact approval timelines. They are subject to corporate taxation in the UK and have generated losses since inception, but benefit from research and development (R&D) tax credits. Overall, management is expressing caution regarding the company's outlook due to various external factors, including regulatory requirements, delays, and evolving policies. The company anticipates significant expenses as it prepares for potential commercial operations and expects costs to increase in the near term to prepare for commercialization. The company's financial activities in recent years have been relatively quiet when it comes to acquisitions and divestitures. There is no clear indication of any significant transactions involving the purchase or sale of assets, businesses, or companies. However, there are some notable mentions that provide insight into the company's strategic moves. In January 2025, the company issued ADSs, American Depositary Shares, and pre-funded warrants to certain investors, along with accompanying 2025 ADS warrants to purchase ADSs. This move suggests a focus on raising capital and expanding its investor base. Additionally, the company has been actively seeking out potential future therapeutic candidates through licensing agreements, collaboration agreements, or other external partnerships. While this is not a specific acquisition transaction, it indicates that the company is proactively exploring opportunities to expand its pipeline of products and services. In summary, while there are no clear indications of acquisitions or divestitures, the company's recent activities suggest a focus on strategic partnerships and capital-raising efforts. The pharmaceutical industry is facing several concerns that could impact its operations. One of the major concerns is inventory buildup or supply chain disruption. This can occur due to various reasons, such as suppliers not being subject to inspection by regulatory bodies, leading to potential delays and sanctions. Additionally, there is a risk of unexpected loss of supply, which can be exacerbated by long transition periods necessary to switch manufacturers and suppliers. Another concern is the potential for pandemics, epidemics, or outbreaks of infectious diseases that could disrupt the supply chain. This could lead to shortages and delays in the delivery of essential medications. Furthermore, regulatory requirements such as DEA registrations and enhanced security measures for Schedule II drugs may also pose a challenge to distribution networks. If distributors fail to obtain or lose these registrations, it can increase costs and discourage pharmacies from carrying certain products. These concerns highlight the potential risks that pharmaceutical companies face in terms of inventory buildup and supply chain disruption. To mitigate these risks, companies must have contingency plans in place to ensure continuity of operations and minimize disruptions to their supply chains. That concludes the financial summary for Compass Pathways plc. Feel free to comment below, and I will be happy to answer them when possible.